Welcome to the CFA Level 1 Practice Test 1. Domain, Alternative Investments, Part 4. Calculate total hedge fund manager fees given management and incentive fee rates, hurdle, and returns. A. 12.80 million. B. 13.60 million. C. 15.20 million. D. None of the above. Answer is A. 12.80 million. Which market belief supports hedge fund strategies profiting from pricing discrepancies? A. Best understood by macroeconomic analysis. B. Short-term mispricing's exploitable. C. Markets always perfectly efficient. D. Not applicable. Answer is B. Short-term mispricing's exploitable. How do increased property taxes affect interim accounting values of real estate in the short term? A. IRR becomes sole accurate measure. B. Values immediately decrease substantially. C. Values may not adjust significantly immediately. D. None of the above. Answer is C. Values may not adjust significantly immediately. Which scenario best evaluates downside risk to luxury automobile revenues? A. Severe global recession. B. 5% steel price increase. C. New competitor marketing campaign. D. Not applicable. Answer is A. Severe global recession. What key consideration applies when comparing an equity fund's Sharpe ratio to a private equity fund's Sharpe ratio? A. Private equity Sharpe ratios typically lower due to fees. B. Ratios directly comparable if correct. C. Private equity Sharpe ratios may be upwardly biased. D. None of the above. Answer is C. Private equity Sharpe ratios may be upwardly biased. Which describes real estate market characteristics? A. Liquid transactions and rapid price discovery. B. Homogeneous assets and easy valuations. C. Price discovery challenges and costly transactions. D. Not applicable. Answer is C. Price discovery challenges and costly transactions. What type of risk primarily affects a hedge fund using a global macro strategy? A. Operational risk. B. Idiosyncratic risk. C. Systematic risk. D. None of the above. Answer is C. Systematic risk. Private equity management fees are most likely based on A. Realized profits. B. Committed capital. C. Assets under management. D. Not applicable. Answer is B. Committed capital. Which characteristic of private capital contributes to diversification in a traditional portfolio? A. Low correlation with public assets. B. Higher returns and risks. C. Requires specialized knowledge. D. None of the above. Answer is A. Low correlation with public assets. What is a key benefit of co-investment for a general partner when fund capital is limited? A. Co-investors learn fund process. B. Accelerates investment timing. C. More transparent returns and positions. D. Not applicable. Answer is B. Accelerates investment timing. Thank you for watching. For more learning videos and tutorials, subscribe to BISP trainings.